God, that lighting though. The TV's on in the background, but I like this ambiance.
Welcome to the Short Vol Show, and market's down a lot this morning as we come into the day, and just popped up and looked at my Twitter feed, and I saw this quote by Bill Luby. So let's find him here for a second. There's a lot of good VIX stuff on Twitter, and there's some guys who all they do is hang out on Twitter, and so you got to go to Twitter if you want to find them. So, you gotta be on Twitter if you're gonna find some of the best stuff. Check it out. It's weird how everything's been so sort of I'm trying to say polarized, but yeah, changed across different platforms. There's different stuff on different platforms, and some guys will go to some, and others will won't go to others. So it's kind of confusing. But there's a quote here which I'm not even finding now. Let's see. Maybe if I go to me, I can see where I retweeted it. Where he's talking about selling puts, and the fact that there's a ton of put sellers in the VIX yesterday, and I think the reason for that, and it's funny, he was talking about how people have given up on the downside in the VIX for the rest of the week, and I certainly, if you've been watching me the last couple of days, I've been selling puts as well. I've sort of given up on the 9 strike in UVXY for the next 10 days. So yesterday, UVXY, I was selling some of the 9 puts 11 days out. So let's just take a look here. So I was selling some of the July 8 puts. That was against some 8 puts I bought in January, but anyways, and also the June 9 puts I was selling for 25 cents against my Ds, and it's a kind of a thing where, like, if stuff is going to kind of stay in a range for a while for me in UVXY, I want to sell something against these puts that I own, because I don't just want to be stuck holding the bag day after day as we either go sideways or up, because you can't make money that way. So if I change these long puts I have into a time spread, then I'm collecting money every day, and what I've done is I've sacrificed the downside, the money I would make for this to go down for a little bit, or for a little amount of space to collect some money. So, from here, right now, UVXY indicated 1053 bid. So this can go down to 9. It can go down 1.5 in the next 10 days, and I can collect any money that I sold these 9 puts for with no repercussions in the end to my position, because these puts that I'm long will increase in value, and but I won't have to get exercised or get assigned on the front month puts that I sold, because the underlying's above 9. Now, it's kind of a little bit of a tricky business, and it really doesn't matter that much if we hit the 9 strike, because I can always roll these puts out, sell the next month out or something like that, or the next week out or something like that. But there are a whole bunch of different strategies. There's as many strategies as there are people out there. Another interesting thing I saw yesterday was this article, not article, but thread in the Facebook group where somebody was asking, when do you take money out of your trading account? That's sort of assuming that you're making money, which I got to tell you is a big assumption. Statistically know that most traders don't make money. So when you ask in an open forum, what do you do with the money you make? You get a lot of hedging from people. And that's reality though. Let's not be let's be real. This the VIX group is and the Facebook group is supposed to be we're supposed to be dealing with reality here. We want to be different than other groups. Reality is most people don't make money. So when you ask someone what they do with their profits, and you ask a broad spectrum of just random people what they do with their profits, you get some glances of shock. And when someone actually says, oh, well, I take about X amount every week, then you get envy, jealousy, that sort of thing. So I thought instead of really addressing that personally or something like that, I would say I want to explain how a professional firm deals with paying out money that you make trading. So let's talk about that for just a second. The setup I had as a professional trader was that we were paid most of the money at the end after the end of the calendar year. So, and the calendar year was like I think it was through January 1st, but you were paid out quarterly. So let's explain everything backwards. I worked as a floor trader, and we had a lot of expenses. The most significant expense was the seat lease. So kind of like a taxi driver has to have a medallion in New York or many places. To trade on the floor, you have to lease a seat. And when I was at the SIBO, the seats ranged anywhere from, and the way you figured out how much you had to pay to rent a seat was it was a percentage of the overall value of a seat. And seats traded just like any other instrument. And they went anywhere from, let's say, $200,000 to $1 million. And seat leases per month varied. While I was there, they varied anywhere from $4,000 a month to $11,000 a month. The kind of setup I had was after all expenses, including the seat lease, office expenses, clerk expenses, other stuff, I was paid what's called a draw, and what that is that's going to come out of the end formula of how much you're owed by the company. But basically, a draw is money to keep you going through the months until you get the bonuses. And it does get subtracted sort of from your bonus at the end. So basically, everything that I'm paid as a trader is based on my performance completely. But I'm given a little money up front to keep me going. And the overall basic formula for how I was paid as a trader was that I keep 40% of my profitability after all expenses. And so expenses per year at that time were about somewhere between $200,000 and $250,000 a year. And that number 40% changes if you are productive and make money every year. Then it would go up to like 41%, 42%, 43%. And you would get a percentage each quarter of what you were owed, and then the balance at the end of the year. So you were trying to have a good year, and you basically keep all the money in your account through the end of that year, and then at the end of the year, everything would be sort of reset, and you start over again. Now, what was the amount of money in your account to begin with? Well, that was kind of it didn't really show, and we didn't really talk about it, but we were on a joint account with many people. I don't know, there was maybe like 15 people in our joint account, and basically they put as much money in that account as was sort of needed. So how much my positions required as far as margin and stuff like that, whatever my positions required as margin, as long as my risk manager was happy with the risk I was taking, I was given. So what we called how much was needed to cover our positions was called their haircut. And so my haircut ranged anywhere from it averaged around, like, let's say $1 million. So I needed $1 million to cover my margin requirements and stuff. But most of the time I was part of a joint account with many people in it. And so let's say there's 20 traders in a joint account, and they'd put in, like, maybe, I think something like $40 million, and then and that would cover everybody's margin. And then, but you kept track of how much money you made in addition to that, how much money you actually made. And that was a number you were looking at. You weren't really looking at the capital requirements to keep you going. And when we thought about capital requirements, we thought about how much does it cost for me to borrow X amount of money. So, for example, if I needed to buy stock, I didn't really think about how much it costs to buy that stock, which is what a retail person would think about. You think about, well, do I have enough money to buy that stock? As a pro trader, you think about what is the cost to borrow that money. So how much interest do I have to pay to hold on to that stock for X amount of time, or however much I need it? If I need stock to hedge against options trades, well, is it worth it because I need to pay interest to borrow that money to hold on to it for X amount of time? And in a sense, as a retail customer, you have to worry about interest too if you're using a margin account, but it's not the same sort of calculation. So I guess I threw a lot at you there really quickly, and you probably didn't understand completely the basis of how the pay and everything was set up. But I'll go back through it again some other time, and maybe you can get a little more out of it. But essentially, it's really fascinating to me to listen to on Facebook when people talk about how they take money out of their account. Because, like I said, in the back of my mind, there's this dynamic that, well, I know that statistically 80 or 90% of people don't make money. Maybe it's a little higher in the Facebook group, but I know that. And so, but most people won't admit to that. And so I see people kind of hedging. And, but let's just talk about those who do make money. I think there's a contingent that is just trying to build up their account to a bigger size. And there's a contingent who takes that money when they need it. And there's a contingent that's just trying to grow it bigger and bigger and bigger to a certain amount. And I guess it depends on if this is like your full-time gig, if you don't have another job or something, and a variety of factors. But it is interesting to watch what people say about when do they take money out of their trading accounts. Anyways, as I speak, market's down more, and let's see. So we've got E-minis down 30, the Dow down 370, and NASDAQ down 100. So definitely stuff down. VIX up almost 2 points, 1427, and futures still in contango, but not so much. Let's take a look at the VIX Central here. Somebody was asking why my VIX Central looks different than theirs, and I'm not quite sure. All right, so we've got spot above the front month future now, so definitely starting to seem like a spike here. But futures still in contango, which is nice. But definite action going on today to the downside in equities. Let's take a look at what investing.com has to say. Futures slide as China-U.S. trade dispute heats up. And you have to wonder, I wonder what the relationship between this China dispute thing is and the talks in Singapore. I wonder if there is a connection. Okay, so futures on the three main U.S. indices slumped more than 1% on Tuesday as President Donald Trump's latest threat to impose duties on additional Chinese goods heightens concerns that a tit-for-tat tariffs could spiral into a trade war. So I guess the question is this just the president talking tough, and then as soon as he gets actually in front of the Chinese leader, he backs down, or what is this? What's just happening right now? It's very hard to tell with the current administration. But we have seen the pattern lately of stuff's bad in the morning and then it comes back. So that's been a very, very common pattern. So look for that to possibly continue. Look for this stuff to bounce, because that's what's been happening lately. As for me, I'm basically flat delta in my UVXY right now because I did sell puts yesterday, and I may look to cover the puts I sold to get short the VIX here at or get short UVXY up here at some point. Try to pick a point to slowly buy in my short puts, because this will revert at some point back down. I have to figure out how aggressive I want to be with that, but this will revert back down at some point. This show is sponsored by Gorilla Trades. Please check them out at GorillaTrades.com. They've had some great picks lately, and they've had some great options picks as well. So check them out. I appreciate them helping me to bring this show to you here today. Anyway, I'm going to let you get to it because markets are moving today. I did find this Bill Luby quote. Do check out Bill Luby. Do check him out because he's got some great stuff. Here's the actual quote. Lots of selling of VIX puts today, with most of the action in June 2011s and 12s. This is from yesterday. Someone thinks the likelihood of the VIX falling another 3% or more this week is very low and is willing to grab the premium and take that risk. And he's showing this chart here where you're seeing premium, you're seeing big volume in put selling. And I'm taking credit because I came yesterday and the day before and I was selling puts. So I feel like my finger's on the pulse right now. Anyway, thanks for watching today, and we will see you in the next one.
Oh my